Welcome back to Dinar Community Channel. The revaluation of the Iraqi dinar has become the single most disruptive financial event in recent history, forcing banks, institutions, and financial markets into a frenzy few could have imagined even months ago. What started as whispered speculation within currency investment communities has now erupted into an undeniable reality. Exchange centers, banks, and wealth management divisions are overwhelmed as the dinar's value skyrockets and holders rush to cash in. This moment, long anticipated by investors and dismissed by skeptics, has now reached its breaking point. Banks are stretched to their very limits, both logistically and structurally, as the massive inflow of currency redemptions collides with unprepared infrastructures and unprecedented demand. The situation playing out across major cities is nothing short of extraordinary. Banks that once brushed off dinar holders as dreamers are now at the forefront of a global financial shockwave. In places like New York, London, Dubai, and Frankfurt, lines of investors stretch outside bank branches, some waiting for hours just to book redemption appointments. The Iraqi dinar's new valuation has shifted from an abstract dream into a concrete, world-changing event that has caught even seasoned financial institutions off guard. For banks, this has become more than a simple operational challenge. It is a survival test, one that reveals both the fragility and resilience of the financial system. The story of the dinar RV has always carried elements of suspense, speculation, and controversy. For years, believers argued that Iraq's oil wealth, economic reforms, and international partnerships would one day necessitate a dramatic adjustment of its currency to reflect its true value. Critics dismissed these arguments, labeling them fantasies propagated by hopeful speculators. But as the revaluation unfolded, those voices of doubt were drowned out by the unmistakable reality of skyrocketing exchange rates. The dinar, once relegated to the shadows of the global financial system, has stepped into the spotlight, and the world's banks are scrambling to respond. Inside banks, the atmosphere is tense. Employees work overtime, call centers are flooded with inquiries, and IT systems have been pushed to their absolute limits as they attempt to handle the sudden explosion of transactional volume. Bank executives are calling emergency meetings, developing temporary policies, and deploying staff from other divisions to support the unprecedented wave of currency exchanges. Even the largest institutions, with their deep resources and technological prowess, are straining to meet the surge of activity. Smaller regional banks and exchange centers, meanwhile, are in pure survival mode, improvising solutions to meet the demands of customers who, in many cases, are seeing life-changing wealth for the first time. The mechanics of the dinar RV are as much about psychology as they are about finance. On the one hand, there is the sheer logistical challenge of verifying notes, securing liquidity, and processing exchanges. On the other hand, there is the emotional intensity of investors who have waited years, sometimes decades, for this very moment. Stories of ordinary families stepping into sudden wealth are spreading rapidly, fueling even more pressure on banks as word of mouth accelerates the influx of customers. Social media has amplified the frenzy, with photos, videos, and testimonies of successful exchanges going viral, further compounding the strain on financial institutions. What makes this moment so destabilizing for banks is the combination of unpredictability and scale. It's one thing to prepare for a normal increase in demand, such as tax season or holiday spending. It's another to face an event that completely rewrites the financial standing of entire segments of the population in a matter of hours. The Iraqi dinar RV is not just another financial headline, it is a rare, once-in-a-generation event that has completely upended traditional banking models. In some places, the demand has been so overwhelming that banks have had to temporarily close branches, citing security concerns and staff exhaustion. Guards have been stationed at entrances, not only to maintain order but also to ensure the safety of customers carrying potentially millions in revalued currency. The ripple effects extend far beyond the walls of local banks. Globally, central banks are monitoring the situation with keen attention, aware that the sudden revaluation of a major currency like the dinar could have significant consequences for international trade, foreign reserves, and exchange markets. Forex markets, already volatile, are experiencing massive swings as traders react to the new valuation. Hedge funds, institutional investors, and sovereign wealth funds are recalibrating strategies in real time. The domino effect of this revaluation is not contained within Iraq or the banks exchanging currency, it is reverberating across the entire global financial system. The breaking point is particularly evident in how banks are struggling with liquidity management. While the dinar's revaluation brings wealth to individuals, banks must ensure they have the actual capital to honor exchanges at the new rates. This requires coordination with central banks, international monetary authorities, and liquidity providers. Many institutions underestimated just how quickly and forcefully the RV would play out, leaving them scrambling to secure enough dollars, euros, and other reserve currencies to meet redemption demands. This scramble has created a secondary effect of tightening liquidity in global markets, adding pressure to an already fragile system. For individual investors, the RV has been a double-edged sword. On one side lies the promise of newfound wealth, the ability to pay off debts, invest in businesses, or secure generational financial stability. On the other side lies confusion, chaos, and the risk of being taken advantage of during a moment of vulnerability. With so much money in motion, scams and fraudulent schemes are proliferating. Unscrupulous actors are offering fake exchange services, promising inflated rates, or attempting to intercept wire transfers. Authorities are issuing warnings, but for many first-time investors suddenly navigating complex financial transactions, the danger remains high. Banks, already stretched thin, are now forced to balance their operational overload with efforts to protect their customers from predatory schemes. The strain has also revealed cracks in banking technology. Online platforms that were designed for steady, predictable traffic are crashing under the surge of account openings, wire transfers, and foreign currency conversions. Call centers report wait times exceeding several hours, and some institutions have resorted to rationing appointment slots to manage the overwhelming demand. Customers are frustrated, but the reality is that the infrastructure of even the most advanced banks was never designed to handle a currency event of this magnitude. This is the definition of a breaking point, a system designed for stability now being tested by instability at a scale it never expected. At the human level, stories of transformation are emerging from every corner. A retired veteran who invested modestly in dinar years ago is now able to buy his dream home. A single mother, long struggling with bills, now finds herself debt-free with the means to secure her children's education. Entire communities are witnessing dramatic shifts as neighbors and families suddenly find themselves in possession of life-changing sums. Yet amid the jubilation, there are also cautionary tales of rushed decisions, poorly structured exchanges, and missed opportunities. Financial advisors are urging restraint and long-term planning, reminding new millionaires that wealth, while powerful, can also be fleeting if not managed wisely. The government of Iraq, meanwhile, is basking in the glow of newfound recognition. The revaluation has not only altered individual lives but has repositioned Iraq on the global stage as a financial force to be reckoned with. Oil revenues, trade agreements, and economic reforms have converged to create the foundation for this RV, and now the world is paying attention. For Iraq, this moment represents not just a currency adjustment but a validation of its economic potential and its place in global markets. The government's careful coordination with international financial institutions has ensured legitimacy, further fueling confidence in the process. Still, the path forward is fraught with uncertainty. Banks, while overwhelmed today, are working feverishly to stabilize processes, expand capacity, and restore confidence. Financial regulators are stepping in to monitor the situation closely, aware that systemic stability must be preserved even as wealth flows like a river through previously dry channels. The coming weeks will be crucial as banks attempt to transition from crisis mode to sustainable operations. Whether they succeed or falter will determine not only the trajectory of the dinar RV but also the broader confidence in the global financial system. This breaking point, though chaotic, is also transformative. It has exposed vulnerabilities in banking operations, highlighted the psychological power of wealth shifts, and forced institutions to confront realities they long ignored. More importantly, it has created opportunities for ordinary people who held faith in a vision that many considered impossible. The Iraqi dinar revaluation has proven that global finance is not always predictable, and that seismic changes can occur when least expected. For now, banks remain at the edge, their staff exhausted, their systems overloaded, and their lobbies overflowing with hopeful investors. Yet even at the breaking point, they are adapting, learning, and evolving. The dinar RV has become both a trial by fire and a catalyst for change. The world is watching closely, not only to see how banks manage this historic moment but also to witness how a single currency event can reshape the financial destiny of millions. The breaking point is not just about banks stretched to their limit, it is about a world learning, in real time, that the financial system is far more fragile, and far more interconnected, than we imagined. The Iraqi Dinar RV has pushed banks to the edge, but it has also opened a new chapter in the story of global finance. For every sleepless banker, every overwhelmed branch, and every anxious investor waiting in line, this moment will be remembered not as the end of a system but as the beginning of something new, a world where wealth can shift overnight, and where the resilience of institutions is tested at the very core. And as the dust settles, one truth remains clear. The Iraqi dinar revaluation has not just pushed banks to the edge, it has pushed the entire world into a new era of financial reality. Like and subscribe for more videos.